Welcome to the Hot Bizfluent Podcast, where we get all up in your business. So let's talk. Today's guests are brought to you by Crush City Realty Group, your premier Houston real estate experts, and luxury real estate agent Alyssa Emmons, where everything she touches turns to sold. And finally, Covo Capital, fast, flexible financing for all your commercial lending needs. This podcast is for informational purposes only. The views expressed in this podcast may not be those of the host or management. Don't forget to stay to the very end to find out how to get some of our amazing merch. Let's get down to business. And now please welcome your host with the most, JP Byers.
Hey guys, how are y'all doing today? So here we are, episode 2. Today we have a special guest with us, but as usual, let's go ahead and talk about the fact that you've got me, JP Byers with Crush City Realty Group. We have Alyssa Emmons here with us with KW Luxury, and Josh with Covo Capital. And so here's the actual cast of our show. Today is actually kind of cool. We have a guest that every single one of us knows. Josh and I are very good friends with, and Alyssa, of course, has met our guest a number of times. And so our guest today is no person of something, whatever. Yeah, that thing.
Words.
Like,
these words. Bad things or good things.
Words. Yeah, words hard. Like, so anyhow, he's no stranger to the business world. He is currently the vice president of commercial lending at Agility Bank, and man, he is excited about his new job and his new position. So let's bring on Steve Charbonneau with Agility Bank, and hopefully he doesn't have as many troubles with words as I do.
What was that?
Exactly.
No, yeah. So I know you guys, and Alyssa and I actually live in the same neighborhood. I don't know if you knew that, JP.
Oh, wow.
Yeah, you should. Yeah, you used to live right next door to us too.
Yeah.
Shoot. Okay.
Yeah, she took a slab foundation.
Introducing you, I was like, I bet they don't even know how we're connected, because we are
Yeah,
not connected in the business world. We're connected via children.
Yep.
So, yeah. So, Alyssa, do you have your sticks gone from your house yet due to the hurricane?
They just came down our street today, and
nice.
The street looks like a war zone because all of the dead limbs and leaves are just all on the street. So what they did for hurricane cleanup in our neighborhood, they started coming through with trucks with claws, but then I think it was taking too long. So now they've got one guy on okay, I don't know all the correct terminology. It's a bulldozer that has a claw on the front as well. So it's like
he got ours yesterday.
And then a grapper. So he came down our street, and I live on a cul-de-sac street. So he starts at the end and he's just pushing stuff. Pushing debris down the street.
Mm-hmm. Yeah. Ours is the same. We got ours taken out yesterday, and the whole front yard, half of it's just dead.
Yeah.
And leaves all over it, and it's. So anyway, we got our daughter's 6th birthday party coming up this weekend here at the house, and our front yard looks like absolute garbage, but that's okay.
Everyone's in the same boat.
That's when you pull a game together for them that is picking up the branches, and then whoever gets the most gets candy.
Yeah, no pinata this year. We're all getting rakes.
Yes.
It's a very traditional game.
It's European.
That's right. European's so in right now. Well, welcome, Steve.
Thank you.
We're glad to have you.
I totally derailed the conversation right when I got in here.
No worries.
Not at all. Heck no. In fact, that's part of the whole thing is look, we're a community of people that all know each other very well. And that's actually something that scares a lot of people. They think that we have some kind of an exclusive club, and really in reality, the conversations and the relationships that we build in this business actually help us to better serve our clientele, because I have people that don't necessarily have any needs in real estate. And I've got 2 great friends that are also in commercial lending that I can send them to and know for a fact that they're going to be well taken care of. So the camaraderie to me is just further proof that, hey, we're not about trying to edge people out of our community. We want people to see that we actually do have tight relationships where we can better serve them, not underserve them.
Yeah, absolutely. Yeah, and it's not hard to get in the group either, right? I mean, you can provide value and have some worth within within the community, and it's open arms, right? It's not like some exclusive club where no one can get in, but yeah. So I've found that as well.
Yeah, absolutely.
So you just switched banks.
Yeah,
and I know we've talked personally, and JP's talked personally about it. Tell us on air a little bit more about this change and why you think it was a good move and how it's a little bit different.
Okay. So not to speak too much about the old bank or banks in general, but I come from a larger bank, still a community bank, but edging towards the $10 billion mark where things get a little bit more regulated, a little bit more tricky. And I've moved now to a small bank, basically a startup. It started 2 years ago. It's a woman-owned bank out of the Heights, and the Heights is the main office right now. And we have a loan production office here in Webster that is the second location. So my team all moved from the previous bank, and so we're going from somewhere where our hands were tied. And a lot of community banks are feeling this right now, and a lot of larger banks are feeling this right now. It's just a product of the economic environment we're in and the industry that we're in. Things just were meant to slow down. I mean, that's what interest rates rising is supposed to do. It's supposed to slow down the economy, and it did. But now I'm in a place that, as a real new beginnings type of bank, we have to get boots on the ground. We have to move quickly to kind of keep the numbers making sense. And so I'm in a place now where those restrictions have been all but lifted. I'm able to do just about any type of lending that you can think of. We're able to look outside the box. We're able to be, I work at agility bank, and I try not to use this term too much, but we're very agile. We are flexible. I think I was having lunch with the president, CEO yesterday, and he said, Steve, tell me some things that are working, some things that are not working. And that's one of the things that's so great. There's so few layers to the corporate structure here that I'm on a weekly call with him and able to get things done a lot faster. But the thing I said is working for me is the flexibility. If there's rarely you'll get what we call in the business an aces, straights, and flushes type of loan, right? There's nothing wrong. There's absolutely just everything goes right with the loan, the financials to the collateral to the we've never had no modifications done, nothing. But that's rare. It's the real world out there. So we all know that change needs to happen, and sometimes you got to roll the punches. And this bank understands that and is not only willing to work with it, but kind of eager. I'm getting a lot of referrals for lending from my banker counterparts out there because, like I mentioned, banking has been in a place where there's been a lot of no's recently. Like, I can't do this, I can't do that. We can't lend on land. We can't do land development. We can't do spec construction. We can't do, you name it. And I'm getting referrals from other bankers that, hey, I can't do this. Can you do it? And I'm saying, yes. And after coming from a year and a half of having to say no or having to make these wild stipulations to get a loan booked where I was at, the ability to say yes is pretty powerful. And it's honestly something I haven't felt in a while. My boss, my direct boss, I'll make another corny joke. My name is Steve Charbonneau, and he says now that I'm Steve Sharper. Yes.
Oh gosh.
So yeah. No, I never did that, but it's true. So and it's been fun. I mean, so I'm at a bank right now with 30 employees. The first team meeting we had with the entire bank was all in one room, and myself and my team down here in Webster, we all came on board together, and we were introduced to the team. And there's some real excitement in the room that we were going to make a difference. And putting a loan on the books at a $10 billion bank just feels like, hey, I'm doing my job. I'm doing what I need to do. I'm hitting the targets that I'm at. But putting a loan on the books at a $50 million bank, moves that needle a little bit, and it's empowering. It feels impactful. And that kind of just adds to the fun that I'm able to have at work right now, which is something.
So one of the things that's actually super beneficial from you is, and Josh experienced the same thing, but we have never really gone too in detail with it or too in depth with it. So at commercial banks aren't the same as residential banks. Residential banks pretty much just you fit every loan in a box. It just is what it is. They lend on cars, personal loans, and houses, and that's pretty much it. The commercial banks, though, you guys, there are certain banks that like to do specific things, and some banks that like to do other specific things. And so, compared to where you came from in the past, what's the difference? Right now, you're saying y'all are super flexible, but to the average person who's trying to start a new business, they don't understand the difference between, hey, this is super flexible versus the bank down the street that's going to be doing commercial lending as well. Frost is a big one. Frost Bank. I've dealt with a lady over there for quite a while. She's very sweet, very good, but they are a bank that says no to a lot of things. So where is it that you see that box that you've come from in the past versus what you've got now?
That's a great question. All banks have their targets, their target of what they want to get. And I haven't seen that out of my current bank yet. Now, it's funny you bring up like someone starting a new business. New business startups are traditionally seen as SBA loans at a conventional bank. There's a lot of good that can come with that. There's also a lot of negative things that can come with that as far as processing goes. And borrowers are on both sides of the fence, depending on, and Alyssa, I just saw the call truck out of my window. It's here. But so the borrowers come on both sides of this spectrum, right? Either they love the SBA because it's a lower down payment, or they hate the SBA because they take a lien on everything that you own. I mean, if you own a rental property in Crosby, Texas, they're going to take that property as collateral. Even if you already have a loan on it, they're going to take a second lien. They'll take a second lien on your cars, trucks, anything. But they're guaranteeing the loan to the bank. So there are good things about that, but there are also negative things about that, especially due to processing, because processing can take up to, 3 months at a screaming fast pace. 90 to 120 days.
Yeah.
And that's fast actually for SBA. So just something I'm working on right now. I've got these guys who are doing, they've invested in real estate before. They own an RV park and they have some rental properties. So they're not new to the commercial real estate world, but they're trying to purchase a building to start a new business in. And this is not a business they've ever done before. And I just know in the back of my mind that if I were still at my prior bank, or really any bank that I can think of, it would have been an SBA loan for sure. But my bank we're moving forward with it. The guys are strong, they're smart, and we believe in them. And just because they haven't done this before isn't necessarily a deterrent from getting the loan done. And that to me was pretty telling to what my bank would do as far as, in as opposed to what I'm used to looking at.
Can I ask a silly question?
Sure.
Because why Josh? Were we prepared for Alyssa to come in and ask the silly questions today? Because I'm not in the commercial world. That's what I'm here for. I'm here to bring.
And that's where I feel kind of bad. That's one of the things about this new bank is that we're not really doing residential stuff right now. We don't have the team for it. So Alyssa, unfortunately, right now, me and you, we don't have a lot we can get done together. But go ahead.
Lies. There's plenty we can do together. My question is, because I've been distracted ever since you said this phrase, because I didn't catch all of it. aces what? Aces straight. What is
aces, straights, and flushes. It's so I say that we say this in the industry. It's
Can
the
you
thing
explain what this means?
Yeah, so
I feel like I want to use
I
this.
apologize if I just glossed over that. So aces, straights, and flushes obviously is a poker reference, and it means the best hands you can get, right? So I had a credit officer, may he rest in peace, great guy. His name was Daryl Bowles. He's got a wonderful reputation throughout the Houston community banking world. And he always used to say that if a deal comes in the loan committee at a certain level, at the time it was, let's say, $5 or $8 million worth of lending relationship, it had to be aces, straights, and flushes, which means you brought a pair of twos in the loan committee, it was not going to get through. You're not going to get a pair of twos approved to put on the books at $8 million. You could maybe so like three kings. Was so if you had to have four aces, straights, or flushes. So it's only the best hands got through that loan committee. So that's what I
like
mean.
it. I was just like that caught my attention.
And
I was like, wait, what is this?
But not everything fits that box. Not everything fits in that. Some people win poker hands with a pair of twos if they play the cards right? So, obviously we have pretty rigorous standards, as any bank should. I'm not telling you we're doing bad loans out there, but things that maybe one thing doesn't look good on the underwriting package, and there's things that are off the page that mitigate those things. And, you just can't necessarily see it on paper. That's where our flexibility, our agility really comes into play. I'm sorry, I'll stop.
How many times do you get to use that phrase a day?
This is the most times I've ever used them in one day. I usually keep.
You're full of it. You're full of it. You can't. You gotta remember. You can't lie to me.
Now I can't stop.
But if it fits, and it seems like it fits, like
it does.
It's so. In our world, typically we tell people, and it's an average out there that most people know, it's 20%. Banks, of all the deals banks look at, they're taking 20% of those loans because they want the cream of the crop. They want the ones that fit them. And people don't know what they don't know. They don't know that this bank likes this and this bank doesn't like that. And they don't know the rules. And even CEOs who've been doing business deals forever, they just don't know. And that's where good bankers come in. And unfortunately, too, there's not as many good bankers out there anymore because the banking industry's changed quite a bit too.
Hold on real quick. My wife was trying to make sure she didn't interrupt the podcast and fell up the stairs.
Flora, I hope you're okay.
Alyssa said she hopes you're okay.
I wish you got it on camera so that
I know, right? She was all creeping. She's like, and she was,
I'll be the compassionate one here.
Yeah, we're all just laughing at her. She's like, Flora, no.
Yeah.
So when y'all were talking about SBA loans, so I mean, if we're talking to people that are not familiar with commercial lending needs or the process, because you're talking about a new business, a startup, or somebody that just wants to get into the world somehow. You're talking about small business administration loans, and JP, I think you had said, 90 to, would y'all say 120 days?
120 days, yeah.
I mean, what is someone that's wanting to get started? Like, what do they need to know as far as to set their expectations of like, hey, you're not just going to be able to walk into a bank or call a lender and get money?
Yeah, that's a great question. And I know I throw terms around, and I'm sure we all do it in the business because we're used to these terms, right? So
that's why I'm here to call y'all out and say, wait, I don't know what that I know what that means, but it's not the words that I use all the time.
And I still do SBA loans. We partner with a guy who's really good at it. But so just at a real high level, the process is, first of all, you got to take this application. The application is like 30 pages long. It's unbelievable. It's going to, for busy business owner, I mean, it's going to take a weekend, to go through this thing. So once we get an application and we, gather all financial statements and everything else that we need, at the very fastest that this is typically going to run is that the bank will take 30 days to underwrite the loan themselves, because at the end of the day, the bank is the one. So the SBA is guaranteeing the loan, but the bank is also taking some risk, right? So the SBA guarantees a certain portion of it, but the bank is the one that's ultimately going to fund the loan. So the bank has to make sure that they approve it as well. So the first 30 days, the bank takes a look at it, gets it in underwriting, reviews all the tax returns, personal financial statement, all that good stuff. So it takes about 30 days to get an approval from the bank. Now, after that, it goes off to be packaged. It gets packaged and goes off to be approved by the SBA, the CDC. And so that takes about 30 days. And then after it gets done with the SBA, then it comes back to the bank, and then you got to fund it. And that, now you got to order loan documents, appraisals, all that sort of thing. So that takes another 30 days. So at the best, you're going to take 90 days to get through that process.
Yeah.
But
that's not true. And we'll have that conversation later.
Well, okay. No, that's a typical bank. I know who you. Yeah, I know there are folks out there who are different.
Well,
but that's the way my bank worked in the past, and that's the way my bank currently works.
So one of the reasons why, and I think that's one of the things that a lot of people misunderstand, and part of what you got to, and maybe it's not layman enough for your average person, and so the problem really is that a bank is not going to be willing to even start ordering even like appraisals, phase ones, all that stuff. And nothing is going to even be worked on until after the SBA has approved the loan. And if you're talking about something on specifically like real estate, they're also going to want to know the piece of property. So it's not like you can just take and say, hey, I want to get prepared for this SBA loan and not have a property to involve in it. Like so you're under contract for a minimum, bare minimum of 90 days and really 120. And that's for somebody who really has their stuff together. In order to get everything, the SBA wants to know what you had for dinner yesterday and what you're thinking about having for dinner tomorrow. And they want 2 years worth of taxes, explanations on where your cash came from, where you spent it, how you spent it, why you spent it, every single potential detail of our business that even as a business owner, I'm like, I don't think in that kind of detail. And so the largest majority of that time really is spent on satisfying the SBA. Once you've satisfied the SBA, a 45-day loan is nothing for a bank, right? But it's getting the SBA satisfied enough to tell the bank, yeah, cool, we'll go ahead and back this loan.
Right. And if you can get a dedicated SBA lender from the start, I think we all know a few, the timeline can be sped up a little bit. But, what I always try to tell people also is that during the process, and this is a process with any lending, once you have something in underwriting, if the underwriter comes back and says, hey, I need to see a bank statement for July of last year, or something like that, whatever it is, get it to them as fast as possible, because these people are all busy, as we all are in our lives and business. If you take 3 days to give them that bank statement, well, they've moved on to something else, and then it's 3 more days before they can get back to your project. So now you've lost a week. You do that 3 times, 4 times, now you've lost a month. Now you've pushed that 90 days into 120 days just by, kind of dragging your feet about getting documents back. So, in a perfect world, it all just screams through, but with the SBA, there's we've all been down the mortgage route, and we all know how difficult that can be. The SBA is 10 times harder. So, then that's another reason why people like to go conventional. And that's what I do. We're able to work with things a little bit more, on the fly. We have this term where, in banking, we always
You're agile.
No, I wasn't going to say that. I was going to say something much worse, is that we like to lift the skirt, but that's where we stop, where the SBA goes a little bit further than that. But
so in our area, I think that one of the biggest things that people miss out on is all the additional opportunities that are offered, and every region is going to have something along the same lines. And I think it's important for any business, regardless of whether you think you need an SBA loan or if you can go to a bank as agile as Agility, then, you
I can
know,
find that.
Yeah, no, and you're really not. I mean, honestly, me and my business partner this week or next week will be moving our business over to Agility ourselves as well, because they're just easier to work with, and even some of the local banks that usually local banks for people are incredibly easy to work with, but for businesses it's not the same. We're not, doing everything in the same manner, and so. But for our area, the Clear Lake area, and most of Houston, you have University of Houston offers the Small Business Development Center. There's one in Clear Lake, there's one in League City, and they will literally take and help you go through, build a business plan, get things going, and get yourself prepared and ready to go see Steve at the bank. And so that's another big portion is just knowing, because Steve's job is far too busy already to help you prepare yourself to come and see him. So if you come and see him and you're not ready, I mean, he does everything he can for you, but he can't hold your hand.
And there's a conflict of interest there too, right? I mean, if I'm trying to get a loan approved for a new business, I can't tell you the projections that you need, like, hey, these are the projections you need to do to service the loan properly. Now I'm double dipping, as far as that goes. So I will always, and I do it all the time, I refer people to those small business development.
So another thing though is also you turn around and you also have that same relationship when it comes to, you can't have that conversation with a loan broker, but a good loan broker will be able to get that information for them up front as well.
100%.
So
it's
I mean,
so just to explore that too. But I mean, Steve, I think primarily does traditional loans. So you guys sub out your SBA? Is that what you were softly saying?
Yeah, exactly.
Okay. So I didn't want to beat the bush on SBA, but I do want to add this in there. So you have non-bank SBA and you have bank SBA. Bank SBA is going to be even more because now that bank like Wells Fargo, and I used to work for Wells Fargo, they would add on their own mitigants to the deal. So instead of a 0%, which an SBA can go as low as 0% by the government standards, but Wells Fargo stating, I want to get at least 30%, skin in the game, as they say, and RN. That's a saying we say in banking, skin in the game. But it's vital that you not only that you go to a bank open, because when you go to Steve or you go to somebody like me or any other banker, you don't want to tell them what you want. You want to see what they have and then react to it based on what they say. Because typically a banker, if you come to them and say, I want an SBA, they're going to ask you why, but typically they're going to service you as an SBA if that's what you want. But there's so many other ways to do it, the other products. Speak on that, Steve. Like, what are the other, I call them legs of the bench, but like speak on the other things and other ways you guys can lend to somebody not outside of SBA, what you guys specifically are looking for. I think you spoke a little bit to it, the old collateral cash flow. And,
it's the C's of credit, right? So we gotta have most of those. Some of them can be mitigated, but a large reason why some people go SBA is because they don't have the collateral piece, and the bank will very, very rarely not work with collateral. So, a business startup like a restaurant, if you're leasing a space and you need money for a build out, and some inventory, the bank really can't do much with that because, for one, restaurants are pretty volatile, especially in the beginning. But, if the loan does go bad, then there's no company there to service the loan payments, and there's no collateral that we can go take and go sell at an auction or something. We can't, if it's a build out, we can't go rip up the floorboards that we funded to put in. But if it's, if you're going out and buying a restaurant, we'll just stick with that analogy. If you're going out to buy a restaurant and there's a building and there's equipment and there's tables and chairs and, you know, all this stuff, then yeah, sure, we can sell the building if it doesn't work out, or, you know, once we take it back, and we can sell the restaurant equipment, all the, you know, ovens and that sort of thing. So that's why the SBA gets involved in some of these types of startups more than you know, other types of businesses. If it's a equipment heavy business, I've got one right now who's looking for a line of credit, and that's what we can do. You know, if the company, you know, maybe it isn't just starting up, but it's a little bit new, and you need some working capital, and you have some accounts receivable, and you have some equipment, and you have some inventory, then we can work with that. That can be what we call our borrowing base, and we take the assets of the company and we lend on those. We typically will do 80% of the value that we give towards those assets. And so long as we can prove that, you know, the cash flow is there to service the debt. And because the last thing we want to do is push someone into bankruptcy. No one wants that. I mean, especially the bank, you know, no, we don't want to take back collateral. We don't want to go sell off generators and buildings. This is the last thing the bank wants to do.
That's a pain.
So we're protecting ourselves as well as the customer from themselves sometimes. I mean, I've seen some, you know, you spend enough time in lending, Josh, I'm sure you know this, you see some pretty crazy stuff from time to time. I mean, I've had a customer come to me and say, Steve, you know, I need a loan to start a new business. What'll make me money? I'm like, wait a second, you're the business owner.
That's awesome.
That's a good point. That's a good point to bring up.
Yeah.
So one of the biggest issues it's becoming a bigger checkbox now, and speak to this within your own bank, but experience.
Yeah.
Oh, yeah. I mean,
business experience itself. Yes.
Business experience. Yeah. Like I said, the guys I'm working with right now who are starting their new business, you know, if they had never done anything in the business world before, that would have been a little bit tougher. But they run, you know, some commercial real estate, and they know how to manage things.
Well, but I mean, it goes even more fine than that. So if a guy has been a manager of a warehouse for 100 years, but decides that he wants to go open up his first Italian restaurant, and it's like, well, my mom cooked great Italian food. So you're like, well, hold on, maybe that's probably not the best.
Yeah.
How about you start with opening up a warehouse, you know?
Right. Or let's get a proof of concept, or, you know, you're going to have to find some private money, you know, something first. Right. So they're equity.
Yep.
You know, so, you know, a lot of times those things are funded by friends and family first.
So I got a hot topic question for you. And I think you and I have already had this conversation, but it's a big one that a lot of people that may or may not watch this podcast are talking about, especially in the state of Texas. And so all of the states around Texas have gone green. And with them all having gone green, it's definitely going to happen here. I figure sometime in the next year to year and a half, I think it'll depend on how everything goes after this presidential election. And we talk a lot about the presidential election as far as how rates and everything are affected. What we don't talk about is going green or accepting marijuana as an actual legitimate potential drug, regardless of whether we want to talk about it for recreational use or for medical use. In the past, after Texas actually legalized hemp, a lot of banks immediately pushed themselves away from anybody that would touch CBD or hemp, which is, just in case anybody doesn't know, hemp is less than 0.3% THC plants. And so the psychoactive drug in marijuana is THC, and you had to have less than 0.3% in order to call it hemp. Agility will mess with those businesses now. Is that correct?
Well, haven't done it yet. So my previous bank, which had a lot more of the regulations, would deal with businesses that sold CBD if they had all the proper registrations. You know, it obviously there's a lot of red tape to go through to be able to sell this stuff. But if they did have any products that went over that threshold of 0.3 THC or whatever it was, whether it was Delta 8, Delta 9, Delta, whatever these deltas are these days that they're coming up with, none of that stuff is allowed. But if there was a good enough business reason to bank those customers that sold just CBD and had all of their ducks in a row, yeah, we would probably do it at Agility Bank. I haven't brought that up yet, but I'm sure we could make something happen.
It's coming.
Don't quote me on that by any means. I hope this isn't recorded. We're just talking, right? This isn't recorded, is it?
Oh no, this is recorded.
No. Oh yeah, it's just recording up there.
So can't be used against you.
So the question I guess then is have y'all had any discussions? Have y'all had any discussions about what y'all will do for people that would potentially have experience and come from out of state over here to start new green businesses? And we don't mean green by energy efficient. We definitely mean we were definitely talking
I was like,
I
print double-sided paper. How much more green you can do.
So I mean, people are when Texas goes green, and so that people understand, marijuana has already been legalized in edible form in the state of Texas. It has to be offered to you by a medical dispensary, so on and so forth. There's a lot of stuff we can get into. That's not what we're here for. However, Texas will be fully green, I guarantee you, in a year to a year and a half maximum. 2 years ago, I said 3 years. We're getting pretty close to that mark. When that happens, though, we're going to have a flood of people who have been farming marijuana in California, Colorado, Oklahoma, and they're going to come down here and start working on trying to buy up land and such. Have y'all even had any discussions about what y'all's plan will be for anybody coming here looking for capital?
Well, no, it's all going to have to be funded by themselves right now. As far as, let's look at Colorado. They have these huge co-ops where they just stack cash because they can't bank in federally chartered banks. And if you have FDIC insurance, then you're at a federally chartered bank, and those banks cannot go against what the federal mandate is for, these products. So for the foreseeable future, until the federal government does something about it, we can't get in.
That's the key. It's going to be the federal mandate. When they decriminalize it federally, that's when you'll see.
I mean, funding. I would assume funding is probably not an issue for the big guys that are having experience enough and big enough, because they've got such deep pockets behind them that they don't need bank loans.
Yeah, no, for sure.
Agricultural loans, but
there's other outside lenders that will lend to that specific.
Oh, sure.
They know that, but it's very highly restrictive because of the fact that there's so much risk in it. Not that the product or the sales of it's risky, just that because it's not decriminalized, and it's not
really. That's right. Anytime you get cash in the bank over it, you're toast.
Yep.
So, well, man, any last?
I called in a loan on my bank when I was working in the banks with Wells Fargo. I called in a loan because that strip center, we found out that they had CBD selling products, and even though everything was rosy on that strip center, 100% occupied, great cash flow, everything was great on this deal. But just because we found out later they were selling CBD, Wells Fargo and Chase and
they accelerated it.
Yep.
Wow.
It's a sticky situation right now. That's why even my comments on it, take it for a grain of salt, because even at the bank I was at, you'd ask one person one day and you'd ask the same person the next day, and you'd get a different answer because someone slept on it and thought this, so maybe we can use this as a gray area. Maybe we can do that, but right now it's a very fluid situation.
So where do you see the things outside of the norm? So the norm, for anybody that doesn't know within banking, if you're a doctor, and specifically a doctor with toys, so that would be dentists, veterinarians, optometrists, things of that nature, not so much someone who sees kids.
Primary care physician.
Care. Someone who actually has some toys in their office. Mm-hmm. Banks love them, highly competitive over them. Yeah. Manufacturing, same thing. where do you see, Steve, within your bank that's kind of allowing you to open up niche wise beyond the basics of what, the typical banks are looking for? Where do you see that going with you guys? What do you see yourselves funding? Gyms,
Right now it's kind of the speculative construction, land development. Those are stuff that other banks aren't really touching right now. And that's where I can really shine. It's still not the easiest thing in the world to do. If you got a big commercial land development deal, we're not doing them for everybody. We're doing them for the ones that know what they're doing. It's like in 2008, you didn't stop making loans on real estate, but you circle the wagons around the people who know what they're doing. And there's a lot of banks right now that are treating this as if 2008 is going to come back around again. We're going to have another huge market crash, but and so they're not even doing that. And so I'm open for business as far as that goes. As far as everything else goes, we're not shying away from anything. I'm looking at a hotel right now, and there's not a whole lot of banks doing hotels right now.
No,
really not. So, I can't think of anything that I've tossed up there, and that they've just said no about yet. So, that's got to make sense, right?
What is y'all's? So this is another thing a lot of people probably don't know in the banking world is at a certain level, especially within a small bank, you've got to go to committee. At what point is yours going to committee? Where's y'all's?
Yeah. So our committee is at 1.25 million, which is low. I'll admit I didn't used to go to committee until it got to 5 million. And then that was a truncated committee, and the real committee started at 8. But we have a board of directors that wants to be involved, and they're super supportive. I wouldn't say they're a rubber stamp, but they're kind of our cheerleaders. So once things go to committee, they're very smart. That a lot of them are doctors or other real estate professionals that are highly successful, and so their comments are good. But up to 1.25 million, it just takes our president, CEO, and our chief credit officer. And our chief credit officer is super, I hate to say the word fun. She's just a delight to be around, which is not something you expect out of a chief credit officer at a bank. I mean, she's from Central Texas. She's just bubbly and one of the smartest people I'll ever meet. She's disarming in her charm. And then you see her review of your loan package, and you're like, holy smokes, this girl doesn't miss anything. So it's refreshing at the same time, but you're also, that you're protected as a lender, that nothing's going to get by this team. But at every level at my bank right now, it's flexible. So even though it's going to loan committee, it doesn't have the same stipulation that I would put on, say, going to loan committee at my prior bank, where now I know there's going to be 50 eyes on it and they're all going to try to tear me down. And going to committee at my new bank feels like they're all trying to build me up. So it's just a different culture. I'm super happy about it. I may have joined a cult in some sort of a way. On Fridays at the main branch. And I maybe shouldn't publicize this, but Fridays at the main branch.
We are recording.
Yeah, it's a neat little story. But 10 minutes prior to opening, every Friday, they turn the lights off, they turn on a disco ball, and they dance. And luckily, I'm at the loan production office out here in Webster, so I'm not dancing in front of anybody. My daughter on the weekends, maybe.
Most people probably don't want to see you dancing, Steve.
No, you don't. But anyway, it's just a cool culture. People are excited to come to work. People are excited to be there, and that doesn't stop with our loan committee. It's really refreshing. I can't say enough about it, to be honest with you. Very agile.
I'll be honest
Very
with you.
agile, yeah.
From a client's perspective, so since I deal with tons of different lenders, but came from the banking world, I actually prefer for my clients a smaller bank that has a smaller mark on that, because it's easy. So one of the biggest disconnects for people getting a loan with any product is you got underwriting, and then second phase would be if you've got a committee. Those can be huge stops if there's no communication in between. So when you go to a big bank, people don't know this, but the person you're talking to at those banks, they're not even typically talking to underwriting. They will never talk to underwriting. In fact, at Wells Fargo, we were expressly told not to talk to underwriting. So there's a disconnect right there that you don't get to explain up what this client is trying to do. And even the same thing with a committee. Now you guys get to make sure that your bank totally understands this deal and you're getting a full okay. But the unique part is, Steve, you're able to go talk and vouch for your client to an extent, whereas 100%. Some of these larger banks can't do that. So I think that's a positive and a benefit based on, where I look at things from a client's perspective. So I think that's great. As long as it doesn't become a point of bogging down deals, it's a really, really good thing. So
it's hard to not emphasize that enough. I'm able to go, talk to my underwriters at any point. It's like they get bogged down. Hey, this cash flow is not working. Well, did you look at this? Did you look at that? What can we do as far as this goes? You can really, it gives you a lot more flexibility. I was going to say massage the deal. That's something we say sometimes, but you can do that, right? So maybe there's something you're not seeing that maybe something your underwriter doesn't see that you've seen because you've talked to the guy, right? So I know the character of the customer. Underwriters are never going to know the character of the customer, and that's one of the big C's of the C's of credit is the character. So it's impossible to get that on the page, but it goes so far. It's because when things get rough, there are some people that are going to pay you back, and there's some people that are going to run. And getting that across to an underwriting team is very difficult. But if you have a direct contact and direct line to them, it's a little bit more easy. So
on that note, speak to this, because I think that's another very good point is, 99% of banking is trust and credibility. Yeah. So what would you not want a client to do coming to you to make sure that they do? Because anything you hold or don't say can be used against you and can be looked at as a trust point. So, for example, one of my SBA deals, the guy didn't facilitate enough money to actually facilitate the loan itself. He put his projections and financials were specifically for his business, but it didn't compensate for the loan he was about to take in order to feed that. So the bank looks at it going, okay, well, obviously you're giving me projections yourself. We didn't say anything on how you're supposed to do these projections. And you're telling us yourself that you can't afford the loan based on your own projections. So along those lines, what are some things that you really would want to let customers and clients know? Hey, make sure you've done these things or don't do this. What are some of those things you want to see with regards to trust and credibility?
Well, for one, if you have a situation like that, you don't want them to come back a week later and all of a sudden their projections are magically better.
They killed the deal.
Because that happens too, right? Hey, well, what about these? Hey, now you're going to So, yeah, I think people just being upfront with themselves about the process, knowing that they have enough cash to make a down payment for a property or and have a little bit extra. Having a little bit extra is so important, whether it's construction or a new business or whatever it is. Like if you're buying $1 million property and you need to put 20% down and you got $200,000 in the bank account, that's not enough. It's because after that $200,000 is gone, and let's say it's a construction deal, and cost overruns happen all the time, especially in inflationary, economic time. And so having extra money left over to weather a storm or to, just in case something goes wrong or your projections don't hit the way you thought they would, because that happens, obviously. Yeah. So that to me is super important.
So if you were to give us your 15-second elevator pitch. Let's close with that. But with one thing, outside of the name agility, you can't say agile.
I can't say it.
Give us your
what is
I'm not going to get caught in an elevator with you. No, I almost did it just now. I just think we're very flexible, if I can use that word still.
Give me your elevator pitch. Hi, I'm Steve Charbonneau. You just met me for the first time. You've got 15 seconds for me. And
15 seconds, I did it for 5 minutes earlier. Okay. I'm Steve Charbonneau, and Agility Bank is a place where you can do business again. We're not one of these banks that has a lot of regulations. We're not one of these banks that you are going to say no without looking at every single angle to make sure we can that we want to do the deal.
Sweet. Make banking fun again.
There you go. You don't have to dance with it, but we're dancing.
Yep. Well, hey, Steve, we really appreciate you, man. It's always fun talking business with you. And dude, you have a blessed day, and we'll be talking to you soon.
All right, y'all do the same.
I'm going to use the phrase now: aces, straight.
Aces, straights, and flushes, baby.
Aces, straights, and flushes.
All right.
Thanks, see you later, brother, man.
Oh, you created a monster.
And I'm going to look for the word agile for a while.
Right.
Steve's the type of guy I think we can have on multiple times because it's just so hard. I'm sitting there going, man, we just don't even have enough time to talk about banking. I mean, it's such a complex thing, and it's something that everybody has to use, and yet they don't understand. People still don't understand it, all the complexities to it.
Well, it's because they're scared. I mean, like, honestly, when you really think about it, the majority of people don't want to go and even talk to a bank until they know exactly what they want. The problem with that thought process is they don't even know really what they want until they've gone to go see the bank. Because once they talk to the bank, the bank reels them in and says, hey, this is not feasible, or why are you trying to open a business?
It's cramming squares in a triangle hole is what a lot of clients will do.
Yeah. And so, it's just one of those things where it's like, if people were to start being more understanding and stop being scared, don't get worried about being told no right now. Come to see your lender, go look for your lender. And I don't care whether it's on equipment or if it's on real estate, or if you're looking to open up a business and you need capital, whatever the reason you want to go see a bank is, go to see the bank. And if you don't even have a business plan, they're going to start pointing you in the right direction, because you're going to need them eventually. And so they want to make sure that you're taken care of as quickly and as efficiently as possible, so that when you do come back to them, you're actually going to be ready.
Yeah, 100%. Yeah, I think it's also important too, just like anything, if you're looking for a realtor, a broker, a doctor, don't be afraid to ask the questions on experience too. How long have you been a banker? How long have you been with this bank? The banker could be 20 years in banking, but only been with that bank for a year. Well, they'll be great at what they do, but they might have a little bit slower fluctuations within that bank.
Yep.
The good thing with Charbonneau is, he knows his stuff, man, and he can get through and it being a smaller bank. I mean, I will repeat, that's a huge thing that they have to go through committee on some of those low ones. It means that bank wants to be involved in their loans, and that's a huge help in communicating up what you're trying to do. I have another client I'm working on in Vegas. It's not EMT. It's ATM machines, and very, 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 very cash heavy. But he hasn't been able to explain this industry to these banks, but he's been going to big banks. So I'm immediately thinking, man, this is entirely bankable. I know this industry; it's a good industry, but you got to find the bank that understands that. Okay, yeah, it's cash heavy, and the way he's getting the way he has his loan structured are basically, he has loans for the cash that is in these machines at 12%. He's trying to, now that he's run this business and gotten the volume up, he's ready to start knocking some of those off and start personally lending. But the great part about that is, and the negative to these banks that he's looking at is, they don't understand that if he loses 20% of his inventory of ATMs that he owns and those territories go out for whatever reason, that loan he has with these people is just, it's not a continuing loan. He gives the money back, it's done. So this $1 million loan of 4, 5, 6 different lenders, private lenders, that he shows on his statement on his book is really not as negative as what it would be with somebody else that actually took out a full loan that's a 10-year, 15-year. These are literally retroactive of, if I don't need it, I can pay you back and we're done. And so that's what we're explaining. And it's actually been a pretty easy loan, but for him going to the banks and not understanding how the banks look at it,
right,
he didn't understand how to communicate that. So,
well, I mean, so for instance, I actually think if you take it and let's use Alyssa, you and your husband have started two or three different businesses, correct?
Yeah.
But y'all funded them primarily on your own, right?
We did. So the first one we started, we funded ourselves to start with, but then we did eventually we went to Frost because that's what we knew at the time. And we just needed a line of credit. We were a inventory heavy business. And so we needed cash. And we needed it to be flexible and, buy the product, sell the product, put it back in the line of credit, access line of credit. So, and then the other businesses, we've just not needed a whole lot of cash. We did intend and want to, and still want to purchase a self-storage facility, which we would need a lot of cash for that. But we've not actually gone all the way through the loan process for that.
Depends.
So let's talk through that scenario, and then we'll probably call it. But so here's the cool part, and it's just because, again, you don't know. So if you start up and you decide you're going to go buy property, build a storage facility, all that stuff, yes, you're going to need a lot of cash, and you're going to have to find someone to attach that has the experience in building it out, because they're going to say, you've never built a facility, you don't know.
Oh, absolutely.
Now you could go through, and there are a lot of what do they call those, franchisee type opportunities in those, and you can go that route, and they can help you, and they can basically fill the gap there. But the way that you would do it, and a lot of people don't understand, is if you can find a existing one that's already built, that already cash flows, you get to use their cash flow.
Yeah.
Right.
Now the gap is not as big, and you don't need as much money. You need the extra money to facilitate operating costs and everything. But here's the other great part. You can lend against that. So you can go and say, okay, we want to buy this facility. It cash flows. We got a percentage we got to pay back to the owner. We got a percentage we have to pay back to the bank. What if you did an owner finance on it too? But there's multiple ways you can actually stretch that cash. But yeah, you still need some, but you don't need as much as long as they're an operating business already. So I always tell people, stop looking at these new businesses that you want. There's plenty of businesses out there that cash flow and that may not be perfect for what you want, but you can do build outs on them. And you're more likely to get that loan than you will ever get starting from scratch, unless you're on your like third or fourth one of building these out. That's the only way you're going to get those done.
Well, not to mention that, honestly, if you have a reputation, and not necessarily with a bank, just a reputation in doing business where you have made money and you can prove that you've made money, plus you have assets on the top of that, and you're purchasing an asset itself, the SBA actually has 0% down loans. And we're not talking about like small, like, hey, I'm going to go spend $100,000. Right now I have a client that's currently under contract at $1.828 million, 100% financed, 100% financed by the SBA. And that's something that they have the option to do. And the reason they wanted to do it is because the cash they do have, they don't want to use as a down payment. What they want to do is they want to be able to use it to do a little bit of remodeling inside. They're taking a very wide open space and turning it into an office for a chiropractor. And so they need a couple of spaces that are closed up.
Yeah.
Yeah. And so,
and the good parts about that deal is, one, he's in the medical, even though it's not one of the toy heavy, it can be, because chiropractors will get x-ray machines and other things like that. That looks good. That's something the bank can take, worst case. Then you got the property value that they're buying, they're not leasing, which a lot of people don't understand either. They always come into these businesses like, I'm just going to lease. Well, that's good. You're cutting your costs to an extent, but you have very little leverage when you're leasing, right? Because you don't know anything. So I've experienced that, haven't I, JP?
Yeah. Yes. I think it was a great second episode, though. I think having Steve on and having him on for multiple times, and it's kind of funny how we're all tied together. You know, I met Josh through Steve, and then Alyssa and I and Steve.
You met me through Mark.
Well, kind of, I guess, if you want to say that. But I wouldn't have come to Mark's house.
Which he's not retiring. He's actually doing more. He is doing more. He's still with Higginbotham, but he's doing more. I'm actually running a deal through him right now for a church for a hard money.
Nice. Heck yeah.
I think they're going to go with him too, so that'll be cool.
But heck yeah. So great second show. Like we'll have this guy up and running for everybody tomorrow morning at 5 a.m. Does anybody have any closing statements they would like to make?
I was going to say, audience, man, if you guys are listening to us, don't feel free to post comments as to what you guys would like to hear, subjects and topics you want to hear about, specific questions that you might have. We'd love to hear from you guys. And even though we announce it every time that we've got cool merch at the end, we will eventually have that. So therefore, that's why I put it in there.
Yeah, exactly. We don't have it there yet, but it is coming. Trust us.
What kind of merch do you want?
Yeah, that would be cool too. We kind of know we're gonna do some t-shirts because everybody.
We're gonna get the signature curve bill.
Yeah, whatever this is. I don't know what that is. I swear that's from Costa Rica.
I know exactly what that's from. I can tell you exactly what that's from because I've had to fix like 3 hats because of it. That's from setting it on your dashboard.
Really? Oh yeah, because it's still angled.
Yep.
Man,
I've had to fix a number of them. So. Well, everybody, it was a great show. We're glad you guys had sat down with us and watched. We know an hour is a lot of your time, and so we do appreciate y'all. We will be happy to see you guys next Thursday. We go live at 5 a.m. Y'all have a blessed day.
Bye.
Adios.